Hello, good morning, ladies and gentlemen. Happy Friday! I'm so excited to be here with you this morning. Let's get this started. So, before we kickstart the live session, let's confirm that we are good to go. And the only way we can do that is by confirming that you can actually hear me and can see my screen clearly. So if you can do these two things, please type in hi in the comment section so that we can get this started. So I would like to see some feedback, please. If you can see my screen and you can hear my voice, let me know right in the comment section. You could type in hi to confirm this, and I will be glad you did. So let's see what we have here. Okay, I can see 8486. Good morning to you. Thank you very, very much. Ram, how are you, Ram? Good morning. Glad to have you around. Dominic Harris, hello. How are you doing this morning? Skyborn, I see you. A Carrie, how are you doing this morning? Good morning to you. All right. Okay, 2286. Good morning to you too as well. 4101. Good morning. Good morning. All right, so on this note, I will take this as a confirmation that we are good to go. So with no further ado, let's dive into the business for today. So on this note, I welcome you to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be going into the charts to evaluate, dissect it from a technical standpoint to manage our existing trade as well, and then position ourselves ahead of the New York session today. And one most important thing about today is that we have a main event coming up in about 2 to 3 hours from now, and that is the non-farm payroll, which is a very, very high impact event we are going to be looking forward to. So it's going to be a very busy day today, so we are going to keep strapped in and get ready for the business. And for those who are joining us for the first time, you are highly welcome on board, as what we simply do here is to come together ahead of the New York session to review the pairs that we have been monitoring since the beginning of the week, and at the same time position ourselves ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And please note that it might be a little bit overwhelming at first, but I assure you that with time, you will get to understand how this works, and you will be able to use the information you'll be gathering here to make your own individual decisions on your account. So once again, you are welcome, and on this note, let's dive right into the business for today. Now, as usual, you know what we do. We want to keep tabs with the fundamental aspect of the market by checking what is really going on the economic calendar. What are we looking out for today? And here we are on the economic calendar. The US Bureau of Labor Statistics will be releasing the April jobs report later on today, which is expected to show an increase of 179,000. And as you can see here, we had the previous data at 236,000, which is a little bit to the deep side. So we are going to be looking forward to what the actual data is going to be today. Is it going to be as expected, below expectation, or is it going to be beyond expectation? So this is one event that majority in the market is looking forward to for this week, following the FOMC that came up a couple of days ago. And why is the non-farm payroll very, very important? Well, it is a data that presents the number of new jobs created during the previous month in all non-agricultural businesses. So it gives us an insight into the health of the US economy in some way, and as a result of this, majority are going to be looking forward to this. All right, so with that information here, we do not have any other high impact affecting any of the currency pairs, so we shall be skipping this at this point, hereby moving into the business for today. And one more thing I would like to state here is that today being the last trading day of the week, there is always a psychological expectation that majority will want to be doing some profit-taking activities, and this could reflect on the chart as price moving in the opposite direction of the momentum that started this week, which we are also going to be taking into consideration while we review all the instruments that we are monitoring since the beginning of the week. So with that being said, here we shall be diving right into the business for today, and the first commodity we are going to be taking on today is the US oil. And on the US oil, we have been very profitable since the beginning of the week. As you can see here, we had price action plunge over 600 pips since the breakdown of the $75.75 level on Monday morning. In fact, it's about 850 pips move, and we had multiple entries to maximize the bearish momentum that we had on this market. So first of all, let's go into how the week started for us so that we can have an idea of where we are coming from as we get prepared for the New York session today. So now looking at the 4 hours time frame, you are right on the 4 hours time frame right now. And remember, at the beginning of the week, we spotted this simple setup that you are seeing on your screen, where we have a descending channel after connecting the series of lower highs and lower lows in this market. And in addition to that descending channel is this very important key level we were able to spot at the beginning of the week, sitting exactly at the $77 area. And what makes this level very important is the fact that it shares a confluence with that resistant line of that descending channel you see here, where price action actually closed during the previous week. And with this whole situation at the beginning of the week, we were expecting one of these two things to happen around this area. Considering the fact that this area is a critical point, we were expecting either a breakout of both the resistant line and the $77 area for buying opportunities in this market. And the other scenarios we were looking at is the potential that selling pressure will continue below the $77 area, hereby respecting the resistant line of that descending channel to incite a bearish move to the downside. And from the look of things, it appears that the latter was what happened after identifying a bearish gap at the beginning of the week, which gave us signs that there was a lot of bearish transaction that happened during the course of the weekend, just right before the opening of this week. Now, with the situation we had here, we scaled down into a much more lower time frame to see how participants in this market has been reacting to that area just right below our key level at the $77 area. And what we were able to spot at the beginning of the week was this choppy situation where price action was initially caught within the $76.20 level and the $75.75 area. And you all know what we look out for whenever price action falls into this kind of flat channel. We want to see price action either break out of the resistant line at the $76.20 level for buying opportunities, or the breakdown of the $75.75 for selling opportunity. And before the beginning of our live session on Monday, I told you all that I already have a sell position running, and I made mention here that for those who had missed out on this opportunity, to hold on for some confirmation, which is going to come in the form of a retest of the structure that was broken to incite another wave. So we had a sell position triggered at the beginning of the week, and not until Tuesday we begin to see a situation where price action was caught within a consolidation phase, which further emphasized the level of indecision in this market. And this whole situation here was prior to the FOMC, where majority in the market were looking forward to the Federal Reserve's announcements regarding its interest rate decision. And one thing we decided here after identifying that channel is that we are going to either see a breakout of the trend line and the $75.75 level for buying opportunity, which never happened. And then we said we are also going to be looking forward to a breakdown retest of the structure of the trend line, have a sell stop below the $75 area to trigger a sell position. And it was at this point on Tuesday during the New York session, I think a couple of hours into the New York session, we had our second sell position for the week, and we continue to ride this momentum all the way to the downside as we kept on adding more positions at the breakdown of key structures that we identified during our live session. So we had a breakdown of the 74, we had the breakdown of the $71.50 level, and we also had the breakdown of the structure had a $69.30 area. And since price action dropped and tested the $67.50 level right on Wednesday during the later part of the New York session, we have seen a situation here where price action has been trapped within a range in the last couple of days to further emphasize the level of indecision in this market. And one thing about this whole structure here, which we actually identified during our live session yesterday, was the fact that we have been seeing higher lows within this area. Despite the choppy situation, we have been seeing signs that buyers are gradually gaining momentum in this market. And one thing we observed here yesterday is that it appears that this whole structure could turn out to be a reversal pattern. And this is what we saw. So following the impulsive move to the downside here, we saw our price tested this lowest point here at the $67.20 level. We saw this whole situation yesterday morning where price action came back into the $69.30 level. Let me extend this out a little bit. And then we saw price action drop again into the structure. So this was where we were doing the live session, and I made mention here that if price action does not break down the previous low, then we might likely be seeing a reversal pattern in the form of a double bottom structure. And you all know, whenever we identify or project a reversal pattern such as this, the next thing we want to be doing is to identify a neckline which will be serving as a platform upon which we are going to be buying. And also the neckline area will also validate the potency of this reversal pattern if we do have a breakout of that structure. So we had a neckline situated at the $69.30 level, which we were looking out for a breakout of that structure to give us an opportunity to buy. And if you are being on standby to catch this move, you will currently be running with about 75 pips in profit at this point, as we saw price action break out, retest this structure a couple of times during the early hours of today to incite this bullish move to the upside. So for those who are taking advantage of this opportunity, very well done to you, and kudos to you for being on standby to catch this move, as right now we all know what we want to be doing. We want to ensure that we secure this current position by moving our stop loss accordingly to lock in some profit. And judging from this case scenario here, I'm suggesting that anywhere right above the $69.30 level seems most appropriate to lock in some profit at this point, as we still don't have a major move yet at this particular point in time. And considering the fact that price action has been bearish since the beginning of the week, we cannot ignore the potentials of sellers coming in at any point in time. So it is very important you secure this position, move your stop loss, lock in this current position while we wait out and see how far this bullish momentum is going to go. And at this point in time, this move here is seen as a counter trend opportunity. And remember, we had two structures that we identified yesterday, which we said if price action comes within that area, we want to ensure we move all stop losses to lock positions, as we never can tell, this could, a touch of the structure could incite a bearish move. Now, what structures are we talking about here? So we will see it very clearly if we scale up into the 4 hours time frame here. And this is the structures you can see on your screen right now. So the first one is the support line of that descending channel we identified earlier. So this is the support line of the descending channel, which appears to be a trend line where price action is currently approaching at this particular point in time. So right now, price is almost close to that level, so the need to move our stop loss is very, very important, as we are at a critical point here where price action could probably retest that structure to incite a move to the downside. Remember, we have the breakdown of the support line here. Price might likely retest the structure, and if selling pressure resumes around that area, there is a high chance that price action could push further to the downside to incite the second wave of the bearish momentum that started this week. So that is one area we want to take note of. So when price gets into that area, we move our stop loss accordingly. Then another area we want to focus on is at the $71.50 level, which happened to be exactly along the support line of that descending channel that was broken on Tuesday. And with this situation here, there is also a chance that if price action climbs above this trend line, giving us more buying opportunity, we also have a structure at the $71.50 level where we are also going to ensure that as soon as price gets into that area, we move our stop loss and wait and see how price action will be reacting to that level to decide if we are going to be adding more position if price action breaks out of that structure, or we are going to be getting ready for another wave of bearish momentum if selling pressure resumes below that structure. So these are the two structures we are going to be looking at for today if this bullish momentum continues to the upside. So please and please take note of this observation. You can screenshot my screen, or you can set your alert at these areas to ensure that you get notified when price action gets into the structures. So that is my view here regarding the bullish momentum we are in right now. And for those who are already in the buy position, I've told us all that we should be securing our current position at this particular point in time, as price action is right along that trend line we just observed here. Now, there is a structure here at the $69.75 level, especially for those who had missed out on these opportunities that we have been enjoying here in the last 24 hours. So we already have price action trading just right above the $69.75 level, which happened to be a resistant line at one point in time. Look at what happened here during the New York session yesterday. We saw as soon as price got into the structure, we saw a sharp rejection of that level. Then in the last 3 to 4 hours, we have seen our price action had continued to range around that area. We have been seeing attempt by the sellers to to reject the buyers' attempt around that area. Sorry about that. And then right now we have a situation where price appeared to have broken out of that structure. This is not a confirmation yet, as this candle is just about 22 minutes old at this point, and it still have a whole lot of time to play out. It could still turn out to be a false breakout at this point. So at this point, ensure you move your stop loss accordingly, lock in some profit. And for those who had missed out on this opportunity, we want to see price action break out of the structure. We want to see a close above of the structure. We scale down to our lower time frame now. Look out for a retest of either the $69.75 level or this bullish trend line here to give us an opportunity to be part of a trend continuation to the upside. So this is how we are going to be managing our buy position here. So for those who had missed out on the buy position we already have right now, wait for price action to break out, retest the $69.75 level for buying opportunity. And for cautious traders out there who are very, very jittery whenever they are in their positions, well, we have a simple setup here that will help us to feel comfortable in whatever position we are in. So right now, what I did here was to connect the series of higher lows, at least in the last 24 hours. As you can see, price has been a little bit bullish at this point. So what I did here was to connect the series of higher lows, giving me this trend line that you can see on your screen right now. So I will be calling this trend line a temporary one at this particular point in time, as I need a significant breakout of that trend line, that bearish trend line, which happens to be the support line of the descending channel we identified on the 4 hours time frame, to confirm this as a valid trend line. So what this trend line is going to be doing for us today is to help us to guide our trading activity. So as long as price action remains above this trend line, we shall feel comfortable in our buy position. Even if there is a drop, there is a potential, there's a possibility that price goes to come back to retest structure. You don't need to get worried. As long as price remains above this trend line, we feel comfortable in our buy position. So you might want to mark this out on your own chart so that you can use it as a reference point to guide your trading activity, or you can as well screenshot my screen so that you can also use it as a point of reference when you're about to make your own individual decision and manage your own trade. So the trend line here continue to be our guide for today's trading session. Now, in as much as we are looking out for buying opportunities in this market, you know what we do here, we always ensure that we also take into consideration the potentials of the sellers too as well. And considering the fact that price action has been bearish since the beginning of this week, we have no other choice than to consider that sellers could still come in at any point in time. And now, to help us identify a bearish momentum if it happens, what do we want to see on this chart that will make us change our bias from being bullish to bearish on this chart? Now, the first thing we want to acknowledge is the fact that we have a trend line, remember, which has been supporting the bullish momentum in the last 48 hours. As you can see, price had consistently respected that trend line. So if at any point in time during the New York session today, we see price action drop below the trend line, and in fact, if it drops below the trend line, it would have dropped below the key level that we have here at the $69.30 level. So if price action drops below both the trend line and the $69.30 level, then at this point we want to be seeing this as a signal that a bearish momentum is gradually coming in. And if this happens, remember, we are not getting too excited. We are not having a sell stop order below those structures. We want to wait for confirmations to happen before we join. And the confirmation will be observed when we scale down to a much more lower time frame, like your 15 minutes, 10 or 5 minutes time frame. Look out for price action retesting the structures where buyers are finding it very, very difficult to climb back above either the $69.30 and the trend line. Then at this point, we want to be seeing this as a signal that sellers are gradually gaining momentum. Then we shall get ready to join the wave to the downside. So we are not selling the US oil spot unless price action breaks down both the trend line and the $69.30 level. So at this point, we remain bullish. We hold on to our bullish momentum. Look out for more opportunities to add more position to our existing trade. So right now, let's keep this in mind. Mark out the trend lines. Use the trend line as a yardstick going forward. And like I said, a breakout of the $69.75 level, which is already happening right now. If you have missed that, you want to wait for a retest of structure at any point in time to add more position to your existing trade. And a further breakout of the $71.50 level definitely will be welcoming more buy position in this market. So that is that on the US oil for today. It's quite a simple setup we have here, and I wish you best of luck on this one, and I hope that you be on standby to catch these moves as the price action evolves in our favor. So if you do have any questions whatsoever, feel free to drop your enquiries in the comment section. I can see Steamroller's comment. Hey Steamroller, how are you doing today? It really has been a very, very long time since I saw you here. Trust you are doing well. Okay, hi boss. Been working in a basement with no internet, so I see. Trust you are doing well anyways, and I'm so excited and glad to see that you are alive and doing well. All good, all good. You're welcome, Steamroller. You're welcome. All right, then. Okay, let's move on to the next option in the absence of no questions. Let's move on to the next option for today, which is the US tech. Now, on the US tech, we have been experiencing some choppy situations since price action tested the $13,000 area, though we are profitable on this pair. Remember, we have been selling since the beginning of the week, and let's run through what we were looking at the beginning of the week that made us to actually sell the US tech. Now, this is what we saw at the beginning of the week when the week started at around the 13,200, I guess. So we have a choppy situation where price action was trapped within a range between the 13,290 and the 13,220, or you could use the 13,200 depending on your preference. So we had this whole structure figured out at the beginning of the week. So it was quite a very choppy situation, and obviously this is very connected to the expectations from the FOMC and the Federal Reserve's announcement on Wednesday. So majority were still testing waters, looking forward to where price action is likely going to be going. But from a technical standpoint, you know what we do whenever we have this kind of simple flat channel. We want to remain patient and wait for price action to either break out of the resistance line of the channel for buying opportunities or break down the support line of the channel for selling opportunities. Though we had some sell positions at the beginning of the week where I think I told us to manually close one of our sell position as we saw this demand zone here where we were seeing our buyers were negating all attempt by the sellers to break down that level. And I told us that day that if we are going to be buying, then we want to see price action break out of this bearish trend line and the 13,350 level to join a bearish momentum. But if we do see price action take out this demand zone by breaking down the structure, then at this point we shall be getting ready to sell. And this was exactly what happened a couple of hours into the New York session on Tuesday, and we saw how price action moved over 170 pips in our favor to give us our first profit at the beginning of the week. Then afterwards, we saw this old choppy situation where we were not really not worried actually, as we expected this to happen. As we all know from a technical standpoint, when price action breaks down a key structure just like this one here at the 13,200, we expect that one point in time price action is likely going to come back and retest the structure to incite another wave to the downside. So on Tuesday stroke Wednesday, we identified this whole situation where I made mention here that there is a chance that we could have a breakout of the supply zone, which could lead into a sharp rejection of 13,200. And that was my exact words that day. I said it could break above the supply zone to do a sharp rejection of the 13,200, which is exactly what happened, as you can see here. And we also had the privilege of taking advantage of that opportunity there. So if you missed this one, we had already had a sell stop order just below the trend line here to be part of a move to the downside. On that occasion too as well, we saw our price action moved at least about over 200 pips in our favor before this bullish momentum came in. And one thing about this whole structure, we discussed this in detail yesterday. We saw our price action was caught within a consolidation phase as soon as price got into that important key level at the $13,000 mark, which happens to be a very strong psychological level considering the round figure of that price. And for the fact that price action is right within the TP target zone for the sellers, which we identified on Monday. Remember, we identified the zone on Monday as our TP target if we are selling, which price action came into that area actually. So most of us will have taken our profit. And then one more thing we said here, that if price action begin to find a reversal pattern here where we begin to see buy pressure, then it will turn out to be a potential demand zone. And look at what we have here. Though yesterday I made mention of something here, though we had a sell position which actually led into the stop loss which we are seeing right now. So we had a stop loss of about 55 pips thereabout, which is not that bad anyways, considering the profit we had made so far this week on the US Tech 100. Now, the fact that price action is right within that zone here, and we have been witnessing this old choppy situation in the last how many days now? In the last 2 days, I'm of the opinion that there is an indecision in this market right now, and majority in this market are waiting for a catalyst that will give us an inclination of where price action is likely going to be going for today. And obviously, we are waiting for the NFP data, which is coming up in about an hour or two from now, which will give us a clue into the health situation of the US economy. Now, I want to share something with you on the 4 hours time frame so that we can have a better perspective of what things are actually looking like from an holistic point of view. And remember, we identified this old structure at the beginning of the week after considering the impulsive move that started from the 12,800 during the course of last week's trading session. So you all know from a technical standpoint, after an impulsive move like this, there is a chance that majority will want to be doing some profit-taking activity, which will reflect on the chart as a retracement phase, which is what we have been witnessing since the beginning of the week. And we projected an area where the retracement phase could end by using our Fibonacci retracement tool. Then we ran it through the previous impulse leg and aimed at our golden zone area, which is always situated between the 50 and the 78.6% of the previous impulse leg. And this was exactly where our TP target for the sell position was, and we took that one. And at the same time, the same area will also serve as a potential accumulation zone for another wave of bullish momentum. So we saw the impulsive move, we saw a retracement into the structure, and if we see a reversal pattern here, probably like a double bottom structure, head and shoulder pattern, breakout retest of the neckline, we want to be in for another wave of bullish momentum. So at this point, how do we intend to take advantage of this bullish move, or how do we position ourselves in such a way that we can catch this opportunity when it finally happens? So in that regard, we shall be going back into the 1 hour time frame. So let's see how price action has been playing just right above that important structure at the $13,000 mark. So at this point, I would like to do some deleting here so that we can have a clean chart to work with. So we shall delete all those ones right now and look at what we have been seeing here since the impulsive move that started on Wednesday. So we had this whole situation. Price dropped into the structure. So we had the lowest point for this week at the $12,940 area. We saw price come back into the structure. We saw a higher low, giving us something that looks like a reversal pattern in the form of a double bottom structure. And you all know what we look out for whenever we have a reversal pattern like this. The next thing we want to be doing is to identify the neckline of that reversal pattern, which will be a platform upon which we are going to be looking out for buying opportunity. And at the same time, the breakout of that structure will validate the potency of the neck of this reversal pattern that we are identifying here. So for the sake of clarity, let us identify the neckline of that reversal pattern. So if we bring out our line chart, so we have something just exactly around the $13,050 mark, which is another good psychological level to look out for. So I will label this one now for the sake of clarity. So we have the $13,050 level serving as the neckline of that reversal pattern, and at the same time it will be serving as a key level for our trading activity for this week. Then another thing I would like to do here is to have some trend lines, which will definitely be one of those things we are also going to be using to project our trading opportunity for today. So right now we already have a breakout of the neckline. As you can see, in the last couple of hours we've seen both the breakout of the 13,050 and the breakout of the bearish trend line that you can see on my screen right now. Now, this has confirmed this. And if you are lucky enough, if you had bought above the 13,050, well done to you for being on standby to catch that move, as you will currently be running with about 1670 pips in profit at this particular point in time. And one thing you want to be having is your stop loss. Ensure you have your stop loss. You can have it somewhere around the $13,000 mark, just right around or below that structure a little bit, which will be dovetailing to about 40 to 50 pips stop loss on that one, as we continue to monitor price action on this area. Now, for those who had missed out on the breakout of the 13,050, well, from a technical standpoint, we still expect that there will be some retest of structure at one point in time, and this might likely be something like this. After the breakout happens, price action could come back to retest either the trend line or the $13,050 level to give us an opportunity to join or add more position to our existing trade. So let's be on standby for these old structures. We might likely see a situation that will probably, prior to the NFP today, we might see price retrace back into the structure, and then during the NFP we could have a bullish move to the upside. So it is important that we are already in this trade prior to the NFP happens, so that we can be part of this move when it finally happens. Now, in as much as we are looking out for buying opportunities in this market, let me label this area so that if you screenshot my screen so that you can be able to see where you are going to be buying. So anywhere above the 13,050 is an area we are looking out for buying opportunity. Now, for sellers in this market, I would not be thinking of selling at this juncture, and that is simply because of the nature of price action here in the last 48 hours. You will see that around that $13,000 mark, we have been seeing our buyers have tried as much as possible to negate the potentials of the sellers in this market. Now, if we are going to be selling anywhere around this area, definitely we want to see price action break down this support line here, then selling pressure below the structure to incite another wave to the downside. So if this does not happen, we are not going to be thinking of selling. Now, to make things more easy for us to feel comfortable in any position we are in, and at the same time help us to know when to buy or when to sell, is a trend line we are going to be identifying right now after connecting the series of higher lows. So I'm going to be doing some readjustment after we bring back our candle chart. So it's something like this. So here we go. So we have a trend line that we shall be using to guide our trading activity for today. So as long as price action remains above this trend line, we shall feel comfortable in our buy position. So, but if price breaks down the trend line, breaks down the $13,000 mark, and selling pressure continues below the structures, then we look out for selling opportunities below the $13,000 mark to join the bearish move to the downside. So we are not going to be selling unless price action drops below the $13,000 area for today. So let's keep this in mind. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision for today. Now, if you have any questions whatsoever, let me know right in the comment section, and I will be willing to be of help. So that is that on the US tech. So I will be moving on to the next next instrument, and that is the GBPUSD, which we've been having some ups and downs in this market. We sold initially at the beginning of the week. Then during the second half of the week, we have been having some sell positions, some buy positions as well. Now look at how the week started for us on the GBPUSD. We had a situation where price action started the week bearish, actually at the 1.25700 area. Then we saw this old choppy situation happen where price was trapped within a simple flat channel, where we were waiting for either a breakout or breakdown of that channel. And what happened at the beginning of the week was quite interesting, as the market gave us a clear signal at the breakdown of that support line at the 1.25420. And I made mention here that for those who had missed out on this opportunity, that we should remain patient and wait for another opportunity to mature before joining, and that will come in the form of a retest of structure to confirm. Then we had a sell stop order, and since then price action had dropped significantly with over 100 pips in our favor before the bullish momentum began on Tuesday. So it was quite a profitable trade for us at the beginning of the week before we started seeing this bullish momentum began right on Tuesday. And remember that at the beginning of the week, we had this old key level, had a 1.2500 level marked out. As we said, this level was supposed to be our guide for this week. And what this simply means is that if price action climbs above this key level, we shall be looking out for buying opportunity. And it was on this stance that we took advantage of this buy opportunity on Wednesday, as we saw the breakout, retest of the structure, and since then price action had continued to find higher highs and higher lows in this market. So congrats to everyone who has been part of this bullish move, as you can see here. Now at this point in time, you all know what you are going to be doing. If you're still in a buy position in this market, for those who are not taking their profits yet, if you are still in the buy position in this market, you want to be moving your stop loss right now to secure your current position, so that you don't get caught up in any sudden pullback that might happen here. So we have our stop losses sitting anywhere below the 1.25910 at this particular point in time, and you all know that we want to give room for price action to breathe. Probably we could still have a trend continuation to the upside. Now going into the New York session today, what is going to be our plans on the GBPUSD? How are we buying the GBPUSD if it's going to be a buy, and how are we going to be selling if it's going to be a sell? Now with this whole situation, the first thing we are going to acknowledge here is the fact that price action has been bullish since the second half of this week. And to further emphasize the strength of the buyers in this market, we have connected the series of higher lows to give us this bullish trend line that you can see on your screen right now. So this trend line you see here is going to be our guide going forward today. And what this simply means is that as long as price action remains above this bullish trend line, we shall feel comfortable in our buy position and look out for more opportunities to add more position to our existing trade. So at this point in time, we are bullish here. We have a buy position running. We look out for more opportunities. And at this point in time, if you had missed out on these buy positions we've had so far, I'm suggesting that anywhere above the 1.23600 level is another next level we are looking forward to buying opportunities in this market. So a breakout of that structure is a signal for us that buyers are still very, very strong in this market. And for the fact that price still remains above that trend line, we shall feel comfortable and confident to add more position to our existing trade. So we're having a buy stop order above the 1.23600 area, where a breakout of that structure welcomes more opportunity, and there is a likelihood that price action could still come back, retest the structure or this trend line for more opportunities to add more position to our existing trade. So that is how we are going to be buying the GBPUSD for today. Now, in as much as we are looking out for buying opportunity, you know how we do it here. We want to ensure that we are also as flexible as possible so that we can catch any potential opportunity when it happens. The market is a very, very fluid environment, and we also need to be as flexible and fluid as well to be able to make profit off the market. So what happens in this case scenario if buyers don't continue to push this momentum and this trend line is broken to the downside? Then at this point, a breakdown of this trend line will welcome the idea of planning to sell the GBPUSD. But remember, we are not getting too excited at the breakdown of the trend line. As you all know, this has been a strong bullish momentum, at least in the last 2 to 3 days in this market. So we are not jumping into any sell position here right away, as we need a confirmation to be shown on the chart to give us that leverage to join, and this would reflect on the chart as a retest of either the trend line or the 1.25910 area, where continued selling pressure below the structure on our lower time frame gives us a sign that buyers are finding it difficult to climb back above that trend line. And if that comes the case, then a sell stop order below the 1.25910 will be welcoming a selling opportunity in this market. And if you look at the structure closely, you will see that it has a tendency of giving us multiple entries if a sell position is triggered at this point. So we have structures like the 1.25700, the 1.25420, and in fact our key level for the week had the 1.25550 area to add more position if we do have a breakdown and a retest of that structures on our lower time frame. So let's be on standby, screenshot my screen so that you can use that as a reference point when to manage your trades, and as well look out for opportunities on this chart. So if you do have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I am very willing to be of help in that regard. So I will be moving on to the next pair while I check the comment section from time to time to see if there are any inquiries for me. So the next commodity we are going to be looking at this morning is the XAUUSD. Hold on a second, please. All right. The XAUUSD has been one interesting pair this week. In fact, the price movement on this chart this week has been very phenomenal, as we saw price action tested a new high at the $2,080.50 level for the first time in a long time, if not the first time at all that price action has ever gotten into that level. So let's see how the week started for us on the XAUUSD. In fact, throughout the week it has been very, very bullish on this pair. So what did we see at the beginning of the week that made us to decide to buy the XAUUSD? So this is what we saw at the beginning of the week. This is the 4 hours time frame. And the first thing you will first observe here, if you take into consideration what has been happening in this market since the beginning, I think since the second week of the month of April, you will have said price action is bearish in this market. After connecting the series of lower highs, we have a trend line in that regard. However, if you look at this whole structure closely, you would realize that though price has been finding lower highs, but we are yet to see a lower low in this market. As you can see, as soon as price gets into that zone between the 1,975 and the 1,970, we have been witnessing buy pressure around that area to negate any attempt by the sellers to break down that structure. And what this simply tells us is that buyers are gradually gaining some momentum, as this area is serving as an accumulation phase that lasted about 2 weeks in this market. And the only reason why one will be thinking of selling this structure is to see the breakdown of that demand zone, taking out all the position to enjoy the bearish move to the downside. However, for the fact that price action is sitting on a very strong demand zone for over 2 weeks in this market, was a sign that at one point in time that trend line is going to be broken. So at the beginning of the week, we were looking forward to a breakout of the trend line, which happened at the beginning of the week, interestingly, which gave us about 150 pips move before price action came back to retest structure before the second wave of that bullish momentum happened. And this is what we saw and how we anticipated that move. So we scaled down into the 1 hour time frame, and we saw this old choppy situation sitting just right above that demand zone, just right within the 1,992 and the 1,980. And then we waited for the breakout of that resistant line at the 1,990, which happens to be our key level for that buying opportunity for this week. And since then, we have been buying, adding more position to our existing trade to maximize the potentials of this bullish move. And one more thing here is that on Tuesday's live session, I was able to spot a setup that we could actually use to take advantage of that move even before the breakout of the 1,990 happened. And I did that on a 15 minutes time frame. Let's run through that quickly so that we can see what I'm talking about here. So we had that structure here on the 15 minutes time frame where I spotted a simple channel that was on Tuesday. No, on Wednesday rather. On West, is it Wednesday? On Tuesday, I think it was on Tuesday. Yes, on Tuesday right here. So we had this whole structure figured out on Tuesday, right on the 15 minutes time frame, and we were looking out for the breakout of that channel for trading opportunities. So since that Tuesday, we have been buying. So look at the structure that was broken. We saw the breakout retest of the 1,985. We had our first buy position. We had the breakout of the 1,990 for the second position. We had our TP target hit here. Another buy position was triggered, giving us more opportunity to be part of this move. As we can see here, we continue to ride the move all the way to the upside. And during on Wednesday's live session, we also had this privilege of adding more buy position to our existing trade here. Now, during our live session yesterday, that was Thursday, we had the simple setup. We were also projecting, okay, was it not? This was yesterday's live session. So we had this whole situation figured out. We saw a bullish trend line confirming the bullish momentum in this market. So let me readjust this trend line so that it can suit the current structure we have here. So we had the bullish trend line here figured out, and we were looking forward to buying opportunities above the 2045 level. This level here, we were looking out for buying opportunities above the structure as at yesterday, and then had more position at the breakout retest of the structure at the 2052. So we had a breakout of the 2045 actually. Price action moved about 75 pips in our favor before the sell pressure resumed. And I do hope you moved your stop loss accordingly to lock in some profit. As you remember, I told us all yesterday that the trend line is going to be guiding our trading activities. So let me highlight the trend line again so that you can see it clearly. So remember, we had this trend line figured out here, and we agreed that this trend line, if price action remains above the trend line, we shall feel comfortable in our buy position, and we look out for more opportunities to add more position to our existing trade. But as you can see, during the early hours of today, we saw our price action has broken down that trend line. And because of this whole situation here, the breakdown of the trend line, I anticipated a sell position at the breakdown of the 2045. So I had a sell stop order below the structure to take advantage of that move, and currently price action is about 670 pips in profit at this particular point in time. And for those who are taking advantage of this opportunity, well done to you for being on standby to catch this move. And one thing you want to be doing right now is to secure the current sell position. And the reason why we are going to be securing it at this point is obviously because there is a tendency that buyers could still come in. This is a very strong bullish trend, and anything could actually happen at this point. And from a psychological standpoint, whenever price action finds a new high, there is always this expectation of a choppy situation. And the reason why that is this: if price action finds a new high like this, it actually takes quite a lot of time before price action acclimatizes to that area. And so majority in the market who are taking advantage of that opportunity at a very cheap price will want to be doing some profit taking activities, because the emotion of fear is now dominant, as most people don't want to get caught up in a crash that might likely happen, as people are not yet comfortable with that new high that we have here. So that is why we are going to be seeing some choppy situations, some retracement phases before price action gains that momentum to now break out of that previous high or even crash to the downside. And if we consider the interest rate hike that happened on Wednesday, normally this should affect the dollar positively. Because of high interest rates, definitely people will want to invest in the dollar to take advantage of that high rates. But at this point in time, I'm of the opinion that the reason why we have not seen that traction for the dollar in the space of the last 24 hours is simply because of the NFP data that we are expecting today. And as a result of this expectation, we have been seeing this old chopper situation exist in this market just right within a 2052 and a $2036 MAC in the last how many days now? Last 24 hours, of course. So we have been seeing this old choppy situation, which is a sign that we are seeing an indecision phase. So you know what we do whenever we have this kind of structure. We want to remain patient, waiting for price action to break out or break down that channel. So we have a channel now that we are going to be focusing on today, which is between the $2052 MAC and the $2036 area, which has been prominent for buying and selling, tussle between the buyers and the sellers in the last 24 hours. So with this whole situation, I told you I have a sell position, and for those who had a sell position here, move your stop loss, secure this current position, and let's see how this price movement is going to go. Then there is one thing about this whole situation, especially for those who had missed out on the breakdown of the 2045, there is still a chance that price action goes to come back and retest the structure that was broken. And if it does happen that price action comes back into that structure and we begin to see sell pressure resume around that area, then this might likely be a sign that sellers are still very strong in this market. So we could have a sell position triggered. Mind you, this whole structure should be observed on a much more lower time frame so that you can catch that move immediately it happens. Then have a sell stop order below the $2036.50 level to add more position to our existing trade, and we still have more structures like the $2030 MAC to add one more position to the existing trade as we ride the move all the way to the downside. So at this point in time, it's looking bearish right now as price action has broken down that trend line. But in as much as we holding on to a bearish bias for today, we cannot ignore the potentials of the buyers too as well. And what do we want to see on this chart that will make us to buy the XAUUSD? Personally, what I want to see on this chart to buy the XAUUSD at this point is to see price action take out that $2052 area, which happens to be the resistant line in the last 24 hours in this market. So we can see how that level had been a strong selling niche in this market, negating all attempt by the buyers to break out of that structure. So for me to buy the XAUUSD today, I want to see price action take out the $2052 level. We could have a buy stop order, and if you are a conscious trader, you might want to wait for a retest of structure to happen before you join that rally to the upside. So with a buy stop order above the 2052, you want to have your stop loss somewhere right around the 2045, which will be dovetailing to about 60 pips thereabout. If you can afford that from your portfolio, it's okay. Then have a stop loss that wide, as remember, we are in a choppy situation and we want to give room for price action to breed in anticipation of probably a breakout of that structure. So at this point in time, I'm still looking bearish on the XAUUSD, but if it happens that we have a breakout of the 2052, then we would have no other choice than to look out for more buying opportunity in this market. And those who had sold below the 2045, please ensure you have moved your stop loss to secure this current position as we wait out for more opportunities to come in this market. So that is my view on the XAUUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to drop your inquiries in the comment section. Then I can see steamroller. I'm on the buy on around on EURAUD. Does it look okay? If you have a minute to look at that. And I'm already out of time. Okay, let's see what I can do about that. I still have one more pair to talk about with my short of time. So moving on right now. Okay, I can see Senku. Good morning, Senku. How are you doing today? 7187. Good morning to you. 799512. I see your comments. Thank you for participating, and glad to have you around. Good morning to you once again. So all right, so let's move on to the last pair on our watch list for the week, which is the USDJPY. Now, the USDJPY is another one pair that was such a profitable trade for us this week. So let's run through what we saw at the beginning of the week that made us to buy and sell the USDJPY. Remember, we had the buy position at the beginning of the week on the USDJPY. So this was a situation we had. The week started on a bullish note, and we saw that in the last 1 month in this market, price action has been bullish. And to further emphasize the strength of the buyers in this market, we acknowledge the higher lows in this market by connecting them together to give us this resultant bullish trend line you can see on your screen. And you know, with a trend line like this, obviously we want to continue to see price action above that structure to look out for more opportunities to buy in this market. So we saw this whole situation happen. So following the impulsive move we saw here last week, we saw price action retrace back into the trend line. And since price action tested the trend line here, yesterday we have seen a situation where price has been trading within that range. So this tells us that we are at a very critical confluence in this market where anything could actually happen. So for the fact that price action is sitting on a very strong trend line, we need to be very, very patient, because price could respect the trend line one more time to incite a trend continuation to the upside, and it could as well break down the trend line to incite a sell-off in this market. So that is why we will need to take a closer dissection of that current structure to see what is really going on. So if we zoom in, I was able to, after monitoring price action since the early hours of today, I was able to identify a simple setup between the 134.350 and the 134.700 area, which definitely will be what we are going to be using to guide our trading activity for today. Now let's scale down to the 1 hour time frame where we'll begin to see things more clearly in this market. So when I scale down into the 1 hour time frame, this is what I was able to spot on the 1 hour time frame, and it will be what we are going to be using to guide our trading activity for today. So since price action tested the 134.700 level, which happens to be the lowest point price action closed at for this week, we have seen buy pressure resume from that area. And in fact, when I connected a series of higher lows, I have a temporary bullish trend line which I was able to spot, giving me a clue that there is a gradual bullish momentum building up behind the scenes. And if we take into consideration the impulsive move that brought us to this point, you would have noticed that it appears price action is gradually transitioning into a reversal pattern in the form of a double bottom structure. Look at what we have here. We have the lowest point here. Price action is yet to break down the previous structure, giving us a higher low. And whenever we have higher lows, this simply tells us that we might be seeing a reversal pattern anytime soon. Now, whenever we have a potential reversal pattern unfolding, the next thing we want to be doing is to quickly identify the neckline, which definitely will be a platform for us to buy. And also the neckline, the breakout of the neckline will validate the potency of that reversal pattern. So we have a neckline sitting at the 134.350, which is going to be serving as our key level for buying opportunity for today. So right now we want to see price action break out of that neckline at the 134.350 to buy the USDJPY today. So if you have a buy stop order above that area, you want your stop loss to be at the previous low here. That's about 40 pips thereabout on that one, to secure your portfolio against a drawdown. So at this point in time, we could still, after a breakout happens, there is still a chance that price could still do a retest of structure or respect that trend line we just identified here, whereby pressure will incite another opportunity to add more position to our existing trade. So that is how we are going to be buying the USDJPY for today, and we have more opportunities to add more position at the breakout of the 135.00 level on this pair. So that is the bullish aspects of this whole expectation in this market for today. However, If price action does not go to the upside and instead it continues to drop, and considering the fact that price action has been bearish on this chart since the beginning of the week, we cannot ignore the potentials of the sellers. And for me to sell at this point, definitely we want to be using the trend line I just shared with you earlier as our guide. So remember, we had this bullish trend line figured out earlier after connecting the series of higher lows, inside giving us a clue into the bullish pressure we have been noticing in this market in the last 24 hours. So if at any point in time price action breaks down this trend line, then we are going to be getting ready to sell. And remember, we are looking out for confirmation, so we scale down to our lower time frame, your 10 minutes, 5 or 15 minutes time frame. Look out for selling pressure, price coming back to retest structure, signs that buyers are finding it difficult to climb back above that trend line. Then we can be part of a bearish move. Then a further breakdown of the 134.700 will welcome more selling opportunities in this market. So that is how we are going to be selling. So as long as price action remains above this trend line, we feel comfortable in a buy position, and the 134.350 level is the neckline of this reversal pattern we just identified here. So that is that on the USDJPY, and that is that on all the instruments that we have been monitoring since the beginning of this week. So I hope you have screenshotted my screen, and I'm very sure we are well equipped to be able to take advantage of this opportunity prior to the NFP and after the NFP. Now to Steamroller's EURAUD. Is Steamroller still in the house? Let me know in the comment section if you're still around. All right. So we have EURAUD, and let's look at it from an holistic point of view of what is really going on in this market. So it's quite obvious that price action has been bullish, but I want to take into consideration what has been happening since the beginning of this year. And if you look at this whole structure since the beginning of the year, you will see that price action has been bullish. And if we connect the series of higher lows in this market, this is what we can see here. So we have a bullish trend line which has been respected since the beginning of this year, as you can see here. So it's very, very bullish at this particular point in time. However, if we take a closer look at this whole structure since last month, since last month, April, I think we have a structure along the 1.640 level, which has been a major determinant of price action in the last 1 month. So if I look at this structure closely, so we have the 1.64. I would rather use a key level, a psychological level, to map this whole structure out. So we have a 1.640 area, just somewhere around that level. I will label that area the 1.6400 area, which will be serving as our key level. And what this simply means, you know what key level simply means here. Whenever we have price action trading above the key level, we look out for buying opportunity, and when price action breaks down the key level, we look out for selling opportunity. So that's what the key level does for us. It helps us to position ourselves in such a way that we can catch potential trading opportunity. Now, from the daily time frame here, this is what we are able to spot from the daily time frame. So if we do some little adjustment, we have something like this. Now look at this structure here. Since last month, we saw our price action broke out of the 1.640 level significantly well after it has been a strong selling niche during the month of March, as you can see here. Now, with the breakout of structure from a technical standpoint, whenever price action breaks out of a structure, we expect that price will come back to retest that structure a couple of times to incite another wave of bullish momentum. But it's not every time such happens, so we need some confirmations that will give us that clarity that really buyers are strong around that area. So you would agree with me at this point that we are at a critical point, where is the 1.6400 area, where price action has been trading since the beginning of this week. So if we scale down to a much more lower time frame, let's say the 4 hours time frame, we begin to see things more clearly. And if we don't see, we go back again to a much more lower time frame in that regard. So right now we have a demand zone situated around that 1.64 area, which you can see in the last 2 weeks. Price action has been, buyers have been trying to negate all attempt by the sellers to break down that structure. So I will name this one a demand zone at this point. So I will give this a white color, and then I like my demand zone to be a little bit darker. It gives me a accumulation tone to this whole structure, if you don't mind me. So we have a demand zone right now. Now, one thing about this whole structure is this: as long as price action remains above that demand zone, definitely we want to be looking out for buying opportunity, of course. But one thing you will notice here is this: since price action tested that high here at the 1.678, you would notice that we have been seeing lower highs in that regard, giving us signs that sellers are gradually gaining some momentum. So we have that level at the 1.67850, I guess. Okay, 1.67850 level. So let's place this at the top right hand side of our screen, and then here we go. I like this to be smaller. All right. Now, if we bring out our line chart and connect the series of lower highs, we should be having something like this. I'll be doing some readjustment if we bring out our candle chart right now. So let's map that out. So we have something like this. So you can see we have a trend line giving us an insight into some bearish momentum building up in this market. So if we do see buy pressure on our lower time frame right above the 1.6400 area, there is a chance that price action will come back into this trend line, which also shares a confluence with the breakdown of that bullish trend line that you can see here. A very important confluence, that is, where a patience is hereby required at that point. So we have a confluence here where anything could happen. We could see certain pressure continue, and we could also see buy pressure resume again from that area to move price to the upside. So if buy pressure resumes at above the 1.64 area here, then we can join and then wait for price action to react to that structure, and the outcome of that area will now determine if we are going to be adding more buy positions. So if price breaks out, then we look out for more opportunities to buy. But if price action continue to find selling pressure, then there is a high chance that we are going to be having a breakdown of this key level at the 1.6400 area. So, and how many pips move is that? From here to here, from here to here is about 150 pips move. So it could be a little bit significant for you if you are a short-term trader. So you might want to take advantage of that. Now we want to scale down to a much more lower time frame to see how participant in this market has been reacting to this key level in the last 8 hours. So I would want to scale down to something like the 15 minutes time frame. Hold on a second. I don't want this to show on my 15 minutes time frame. So I'll do this, and then the 164, I think I need the 164 there. So let's go down to our 15 minutes time frame, and here we are on the 15 minutes time frame. So I want to readjust this key level so that it can show on our screen. This is too long. So we have the 1.64, right? So we have the 1.64 right now. So I will just zoom right into that structure. That is where our center of focus is going to be. So this is our 1.64, which is the key level we identified on the daily time frame. Now, if you look at this whole structure here, this is the lowest point price action has been for this week at the 1.63680. So 1.63680. Bottom, okay, right hand side. So we have the 1.63680 here, and following the impulsive move that started maybe this week or probably last week, we saw the first touch here. Price action came back into our key level, at the 1.64. And as at this point in time, price is yet to break down the previous low. So we might likely see a situation where price will evolve into a reversal pattern in the form of a double bottom structure. And if this holds, that is, if price action finds it difficult to break down the previous low here, then we have a reversal pattern in our hands. Now, whenever we identify a potential reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern, which coincidentally lines exactly up with that key level we identified at the 1.6400 level on our daily time frame. So you all know what we are going to be looking out for in that case scenario. We want to see price action breakout, retest the structure to give us an opportunity to buy. So anywhere above the 1.64 today seems most appropriate to be looking out for buying opportunity. So we are looking out for buy, breakout, retest of the structure. Now, that's where we are going to be looking out for buying opportunity at this point. Then we should have a stop loss anywhere right below the previous low, or probably the resistance line here, about 30 pips or 25 pips stop loss, depending on if this whole situation becomes the new higher low in this market. So this area now is our center of focus for today. Let me zoom this in now so that you can see it clearly. So our center of focus for today, or for the next 2 hours or 1 hour, is this area here. Will this turn out to be a higher low? That is, price does not break down the previous low. If this happens, then the tendency of a bullish momentum at this point, it becomes higher. Now, if that's going to be the case here, then I want to have higher lows in this market. This will help us to feel comfortable in our buy position if we are in the buy position. So as long as price action remains above that trend line, we'll feel comfortable in our buy position. And if at any point in time price breaks down that trend line, then we want to know that a momentum shift is gradually coming in. Then we get ready to sell at that particular point in time. And remember, if we are selling, we want to see price action break down, retest. Mind you, we want to see a retest of structure in our lower time frame. It could be your 5 minutes, your 10 minutes. Then we want to sell at the formation of a reversal pattern. That is, buyers are finding it difficult to climb above that trend line. Then we could have a sell stop again below the 1.6380. At this point, you have maximized the sell position in this market. So that's the only way we are going to be selling at this point. And we only look out for buying opportunity as long as price action remains above this trend line, where a confirmation is going to be coming in at the breakout of this key level at the 1.6400 area. So that is how we are going to be doing this trade today. So let me mark this out for the sake of clarity, so you can screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that for the EURAUD. I hope Steamroller is in the house. Okay, I can see your comment, Steamroller. All right, you're welcome, and I wish you a wonderful weekend too as well. Jerome45, hello to you. How are you doing today? 187, good morning. All right, so it's on this note I want to call it a day on the Extreme Speed Live. It has been a wonderful week for us. We were able to make a lot of profit from the US oil spots, the XAUUSD, the GBPUSD, and the USDJPY, and the US Tech 100. So it was quite an interesting week for everyone in the house, and I'm so glad to be part of this experience with you guys. Do have a wonderful weekend, everybody. Have a wonderful day. I wish you best of luck during the New York session today, and peace out. Bye bye.